Okay, hello everyone. My name is Dan Stevenson and I work in the marketing department at FXChoice. Welcome and thank you for joining us at our FXChoice Technical Analysis webinar with Trevor Neil. We'll aim for the webinar to be approximately 30 minutes. However, we may spill over by 10 minutes or so. It depends how many questions we get. Apologies to those who attended last week about the last minute cancellation due to technical issues. Really sorry about that. We've taken steps to make sure it doesn't happen again. Now, if you have a slow internet connection, it might be better for you to dial into the webinar. You can find instructions how to do so in the email that you received after registering. This is, basically it's through your telephone. You call a local number, and it's a little bit easier to hear what's going on if you have a slow internet connection. So, Trevor Neil will be presenting the webinar today. You can read about Trevor's, and you can read his full bio in 8 languages via the link we sent you in the confirmation email. But just to give you a brief introduction, Trevor is a very experienced technical analyst, 40 years under his belt. He worked at companies like Merrill Lynch and was global head of technical analysis at Bloomberg, so he's a very experienced man. He managed a large hedge fund in South Africa, and he still manages a hedge fund to this day. Trevor is now passing on his skills via webinars like this, courses and mentoring programs. So before I pass over to Trevor, if you have any questions for him, please do so in the questions tab on your go-to webinar tool. You should be able to see a little tab there that says questions. Click in there and you can write your question, and I'll try to ask Trevor the question at an opportune moment. Please keep the questions on topic. And if we have time, if we don't have time to get around to answering all your questions, please feel free to send them to webinar@myfxchoice.com. That's webinar@myfxchoice.com, and we'll pass those on to Trevor. Okay, Trevor, so what are we talking about this week? Big week, big move in the dollar, bears wrong-footed. Is this a reaction or a real change in direction? Over to you, sir.
Okay, thanks very much, Dan, and welcome everybody, and sorry about the technical problems last week. Right, well, we're going to start with the euro. It was a big move last week. At long last, the dollar decided which way it was going to go, broke out of its range, and caught a lot of people wrong-footed by moving up, and there were a lot of people who are wrongly positioned for that. That caused quite a scramble during the week. This, of course, means that the euro moved down. So we had this topping out, this slowing up pattern. Just incidentally, this is the euro dollar weekly chart. So each bar is a week here, and I've got various lines on here. I've got moving averages. This is the 50-day. This is the 200-day average. This is the MACD at the bottom here, and this is the relative strength index here above it. So as I say, the euro had been losing momentum, forming this topping pattern. We'll look at it in more detail in a moment. Then we had last week's plummet, and we've started to hold here now. There is a good reason for it to hold at this level. There is some minor support at the level, but it's not strong support, and so it is vulnerable to going further. Again, I'll talk more about that in a moment. The relative strength index on the weekly chart has come down now to not oversold, but certainly from reacted to the extremely overbought condition that it had been in July and August. And the weekly MACD has almost crossed over for it. So this is almost turned from the bullish message that we've had since May in the euro to a bearish message. Now I'm going to move to the daily chart. And so euro daily here, and this is the range I was talking about, and this is then the fall in the euro and the rise in the dollar. The indicators here, the RSI went deeply to a low reading here and started to turn up here as we've lost downside momentum really today, I suppose. The ATR has come up a bit, the average true range has come up a bit. The ADX, which measures the trendiness of the market, is also moving up slightly here. It's at 26. That's indicating there's a trend. There is a trend, and the direction is down. I think it's also worth noting that we broke last week the 50-day moving average. A lot of things have broken their 50-day moving averages as a result of that move. So what have we got ahead for this? there is really little technical support at 115. There is some support at 115, one part of it being that it's a big round number, but in terms of consolidation support, it's not strong. It really comes in more strongly at 114. So it's, you know, it's quite vulnerable to continuing further down here and not picking up support for quite a while. The move up in July was very, very rapid in the euro. So we moved up into this consolidation very fast. This means that we didn't spend much time. There weren't many positions as we traveled through from 114 up to 117. And this means there isn't going to be many profit takers or much friction if we continue to move lower. So I do see this taking the route of least resistance, which is now downwards, and continuing lower, and really probably not managing to pause much at 115 despite it being that big number, because the support really doesn't come in until 114, and that support is substantial. That is a big consolidation at the end of 2018, start of 2019, some tops in March 19, another, we fell away, then we rallied again to 114 in May 2019. Then we had the big spike in February 2020. Then we hesitated in May at 114, came back down to 111.5, and then we finally broke out in June and July and surged away really fast up to the 118.5, 119 area that we've just moved out of. So this is at the 114 level is absolutely solid there, and I'd be very shocked to see if we didn't, to see us do anything more than probe into this area here, because it's such a important level. I'll just quickly show you this on the weekly chart. So here's the consolidation, here's top, here's the top, this is the 114 line, 114, 114, 114, very heavy resistance there. Then finally in July we broke it. All that resistance becomes, instead of being heavy resistance, becomes heavy support. That's why I see it going and spending very little time around 115. Right, now next we're going to look at sterling. Cable. So you can see sterling on the chart, I hope now.
Weekly GBP.
Weekly GBP. So it's a long way away, the 133 level, but that is a massive area for sterling. But really the market has been pricing in bad news for sterling for a long time. We can see from commitments of traders and other information that we've got that the market is very short, and so it's very vulnerable to good news. Now the tone seems to be changing a bit in the background. As Brexit approaches, there seems to be a slight softening in the tones from there, and so market is a bit potentially in a position to get badly caught short if there's some good news. Imagine that we got some announcement that we're close, or there's only one stumbling block left, or something like that. Then I think the market is quite vulnerable to shooting up. So I think it was noticeable the thrust of last week was weaker than the previous thrust. Let me show you that on the daily chart. That'll be clearer in the daily chart. So you're seeing the daily now, I hope?
Yes, GBP.
Yeah. So we had a thrust down, then a rally, then a new thrust here. And this one, you can see this thrust here of 2 weeks ago, really, wasn't as strong as this one. And we saw that through the bullish divergence in the RSI. So this thrust to new lows when we traded down to 127 area was always looking like it was overstretched and vulnerable to a move up. The RSI moved up through my level. I use 35 for my lower line here, 35%, and it moved up there on Friday, and now we're rallying. I'm not surprised to see that rally just because of the weakness of this sell-off here. And I think that really it's not bullish by any means, but it is vulnerable to sharp upward movements, I believe, this market. The trigger is the 130 level here, the short-term trigger, and then, as I mentioned before, the major level is 133. So if we can clear 130, I think it will move very fast to 133 and test that, and well, we don't know what will happen after that. So next I'd like to look at the yen.
Daily yen.
Daily yen. So the yen was very interesting last week because it fared better in the rout than other currencies. It advanced or failed, if you'd like, by just 1%. It looks technically weak. However, this advance in the dollar and the weakness in the yen. The weekly MACD remains negative. I should just tell you for that there, and it's still below its 50-day moving average. There is substantial resistance here that we've come up to during last week's rally here in the dollar yen, and so I think that it's going to stall close to here, and I think it will reassert the long-term downtrend will reassert itself. We have tested that 50-day moving average quite a few times. It's been quite notable that, and we're approaching it there. So my intuition is, you have to watch the behavior at the time, is that that this rally will peter out around the 50-day moving average, as it has been doing time after time, and continue its journey lower. There is major support at 104.50 is the major support for it, and that is a very important support level. It is this low here, of course, but it was also the low in June. We spiked through it in March 2020, but it was the low in August 19, and just above it was the low in December 18. So a number of times that level has been validated by rejection, and therefore I would be shocked if we pass through that without hesitation. So my view about this is that this rally in the dollar yen is going to peter out around the 50-day moving average level, which is at 105.83 today, and that will be sufficient to cause a retest of the low of the third week of September, which will hold because it is such a important multi-year support level. Now, I'd like to talk a bit about the commodity currency, because they were really hit hard during this rout. And the one I'll pick is the Australian dollar. But I should mention in passing, the Mexican peso blasted nearly 6% on that dollar move there. So it was the biggest mover of them all. But the Australian dollar and the New Zealand dollar both fell 3%. The Australian dollar has come back to 70 cents, as you can see here, and that is a very important level. So we've dropped back here, plummeted in the Australian dollar, US dollar, to what was the high of June, the high of January 2020, and this series here in July and August. And I could extend this line to the left because that same level was also support earlier on. So it has switched emphasis. So I see this as very substantial and important support. And so I think that these levels are going to be sufficient to, having been old resistance, becoming now support. And I would expect that during this week, the fall will come to rest, we're back on the daily. We'll come to rest close to this level here. So we won't extend much
Sorry,
further.
Trevor, can I stop you? We're not looking at any kind of chart. We're looking at a toolbar of some kind.
Oh, all right, sorry. Thank you very much. You won't learn much from that. That I hope you are seeing, and I'll get rid of that toolbar that was naughtily on the top there. And you're okay now.
We're looking at daily Aussie. Now we're looking at weekly Aussie. Aussie versus USD. Aussie USD.
Okay, so you did see the 70-cent level there. I want to move to the daily, which I hope you're seeing now.
Yes.
Yeah, and here we are. And I'm now looking at the daily chart, so looking for signs of it starting to get stability at this 70-cent level. The RSI, as you can see, which is the main one that I would use to help me with this, has come down deep and low and has started to rally a bit here from that, indicating that it is losing momentum on the downside. And so I wouldn't be surprised to see a rally now, but that's not to say that it has to go up particularly strongly from here and breach the 174 highs or anything like that. It's just that it's done enough for the moment. So I would expect this week to be steady for the Aussie dollar.
Trevor, we've got a question. We've got a question,
please.
Trevor. Can I jump in? Karim asks a question. Actually, he's asking if you're going to make a comment on gold, but we know that you're going to show the gold chart a little later. But he also asks, where do you see the CAD? I thought this might be a good time to get in as we're talking about the Aussie.
The Canadian dollar. Okay,
yes.
Let's get it on here.
Thanks for your question, Karim.
Yes, thank you very much. The chart here is different. Let me go to the weekly chart. Here's the weekly chart. So here we fell, down to 130. Then it's rallied strongly, accelerating last week. It had already started to move up, but accelerated last week. And the question is, what's it going to do right now? Now, so to do that, let us go to the daily chart. There it is. And so this is this journey up here now. We've made this first impulse move, the pause for nearly 10 days there of trading. Then we've moved on again. And I would say that we are now at this extremely high RSI reading, and we're still high and still not pointing down. So it hasn't weakened yet. It's lost a little bit of momentum, but it hasn't really weakened yet. So if the gentleman was thinking of buying, I would not. I'd be cautious about missing out on this, because this high reading on the RSI is an indication of strength in the market, and the fact that it doesn't drift down at this time indicates that it's still got positive momentum. And so I feel it's vulnerable to actually consolidating for a short while and then having another leg. But at least you've got very clear places to tell you that we're on our way again, and that's the two highs of Thursday and Friday of last week. If we do drift down in the RSI and come down through the 65 levels, the level I use, then I think that we'll come down and retest the 132.40 level. But at this moment, I think on balance, the likelihood is that it will follow through, and many people perhaps are waiting to get in, hoping for lower levels that they might not see. So let's say if the strength redevelops, then I think I'd be personally tempted to follow it, because it is so strong. And just as a matter of interest, the MACD is on the weekly is about to cross, confirming that, and the new trend in the market. So I think the danger is missing out. But if you hadn't got a position, I'd wait, let the market tell you whether it's breaking up or not, and we've got the levels there. If it's breaking down, and that is breaking down through 133.20 area, in particular the RSI turning down through the 65 level, then I would think you'll get a good chance to buy, if you want to buy, back in around 132 area. But the trend is turning to the upside. So the bias is bullish now for it. I hope that answers your question.
Thank you for your question.
And please, anybody else ask questions as well.
Well, we do actually have another one, Trevor.
Yes.
Sidiko asks a question. Thank you for your question, Sidiko. Please share, how do I use these indicators like RSI and MACD? I suppose that's quite a big question for you to answer.
Yes, it is. I mean, really, when I teach courses in this, how to interpret the RSI is probably 2-3 hours of teaching, because although it's a simple indicator, it's an oscillator going from 0 to 100. What the calculation of it is quite simple. It's essentially a percentage reading of all the movement in the last period. The period is normally 14 bars, 14 days, for example, or 14 5 minutes, or whatever period you're looking at. I use 7, and I would need quite a lot of time to explain to you why I choose 7 and not 14. But in that period, it's a ratio of the movements up in the last 7 bars, in my case, versus all the movements up and down in the last 7 bars, smoothed slightly. So this reading of 72.9 that we've got here now tells you that of all the movement in the market up and down in the last 7 bars, 1, 2, 3, 4, 5, 6, 7, 73% of it has been to the upside. That's what it's telling you. And so what it's telling you, what that number is very big, isn't it? So it's telling you that it's strong. It's not weak, it's strong, that market. People say it's overbought, but it's got there because it's strong. The second part is the direction of the RSI. If it's at 73 and going up, and so the previous readings were lower, 2 days ago it was at 60, for example, now it's at 73, that's a market that's strong and getting stronger. But if it was it's at 73 and last week or a few days ago it was at 85, that's a market that was stronger and is weakening. Now that's a vulnerable market to falling down, because that's a very extreme reading. So it's the interpretation is not complicated, but it isn't as simple as a high reading or a low reading telling you to sell or buy. It's the height of the reading plus the direction of it. If it's high and going up, it's a strong thing getting stronger. If it's high and going down, it's a thing that was strong that can't hold the strength, and it probably is going to go lower. But you know, sometimes it doesn't happen, because markets go up, pause for a bit, and then go up again, which could happen here. We could go up, pause, and then go up again, or happen here. We went up here, then paused, and then went up again. So it isn't necessarily the case that if you've been going up strongly and turned down in the RSI that you must go down. So there's a lot to know about it. It's a great indicator. It's very popular for very good reason, because it helps people. But people are a little bit lazy about learning about it, the mathematics of it, what it's actually telling you, and how to interpret it. And it's a simple indicator. It's great. So the message is relatively simple, but it's still, you have to learn it, and it isn't obvious, and it isn't as simple as many books and many other people tell you. The MACD, I'll tell you about another time. The MAC is the difference. CD is the difference between 2 moving averages, fast one above a slow one. If the fast one is above the slow one, simply speaking, we're going up. That's what puts it there.
I hope that answers your question, Sidiko.
Actually, I know very well it doesn't answer your question, because that's I need more of your time. Okay, so let's. We've already looked at now the Australian dollar. Now that I'm going to move to Bitcoin, but you can deflect me if you want. I am coming up to gold, so for those of you that are anxious about that, I'll do the US 500 and then gold. So Bitcoin fared much better than Ethereum, for example, in the flight from risk that we saw last week. And it has 10,000 as a very solid base here. look at the importance of 10,000. Not only is it a big round number, so it's psychologically important because it means a lot to people, the number, but it rebuffed us in February, it rebuffed us in May and June as well. Then when we broke it in August, the beginning of August, it powered away through it because there was such a relief now we were on our way. And then when we topped out in August and September, it came back, and you know, from a technical point of view, somewhat predictably, it found its footing there because what was strong resistance now became strong support. Plus, it was the big round number. It is below its 50-day moving average now, but above the 10,000 level. Let me just go to the daily chart here now. So here's 10,000 here. Here's it holding at 10,000. I put in a Fibonacci retracement here from the 12,000 high at the beginning of September down to the low of September at 10,000 or just below 10,000. And you can see here now we're around 50% of that, and we're consolidating at that. The MACD is positive, so it's moving up in direction. It's not overbought, so it's not vulnerable. So I expect that Bitcoin will continue to move forward from here. It's meeting resistance, but not strong resistance, around 10,900 up to 11,183. And that area there, I expect it to be tested this week. If we break it, then we can move quite swiftly upward from there, because this is blue sky in this area here. But I think then this old resistance will reassert itself. So I don't think it's going to fly away from there. So there'll be traction, there'll be friction from that point. But the breaking of the 11,180 level, 83 level, will bring in additional buying, I believe, at that point. So I think that we're trading up through this range, and we could test the top of it. Now we must talk about the euro, the US 500. It was a massive week there, and it's a massive day for it today. So we've had now since the beginning of September a big pullback in the S&P 500, led by the FANG plus stocks. Do you know
Trevor,
what?
please explain what these are. Yeah.
Any of you that don't know what I'm talking about here, FANG, the spelling of FANG is F-A-A-N-G, and then we've got plus on it now because there are a couple of extra ones too. But it's basically Facebook, Amazon, Apple, Netflix, and Google. So the stocks. Now they account for most of the capitalization, overwhelmingly most of the capitalization of the S&P 500. The rest of the stocks, the 493 or 4 stocks, just don't count for anything. And they had led it, the index itself up, and the rest of the market hadn't really followed. There were quite a lot of stocks which were quite languishing, and even some that were going down quite a lot. The FANG stocks have completely separated themselves from the rest of the market. But now we've had this correction take place over the last, this month here, and we've had this major sell-off. And we broke 3,400, which was a big support level, and that was quite crucial technically. 3,400 was the February high. And we were all cheered when in August we broke out through that with a gap, which was technically very bullish, but now we've settled down back below it. We are touching the 50-day moving average here, which will be very interesting to see how it behaves with regard to that. Is the 200-day moving average down here. The RSI is moving up powerfully here, and we have gapped high, and jumping in the way we have done on this Monday start is quite an unusual thing in the stock market, and it's done it with a great deal of power, and this is a bullish message. And so I think that we're going to recoup a good part of the fall that we've just made. And what I probably should do now, and so I'll do it here. So let me get back control of my cursor. I'm going to put in Fibonacci. I'm going to measure from the high here down to the low here. And I can see that, and hopefully you, no, you can't see, I just see it's paused.
No.
Now you can see, I think I've drawn the Fibonacci on there. So
Sorry,
we've
Trevor,
moved
no.
up. I'm sorry, Dan?
Not seeing anything, Trevor, sorry. I'm just seeing the US 500 weekly, that's it. Not seeing any Fibonacci. Ah, there it is. It's appeared like magic from nowhere.
Yeah, and it's actually the daily. Excuse me.
No, it's the daily.
It's
Take
a
no
daily.
notice of Trevor's
With the gap,
label.
and we've rallied now 38.2% here. And so if it was going to stop, it might be one of the levels that it could stop. 50% seems more likely to me, because much more of a consolidation. That's at 3,400, pretty well exactly, area there. The RSI has got good upside momentum in it, which would be enough, I think, to take us at least up to there. So the indication is that for the early part of the week anyway, we're going to continue on higher, but then we'll have to see whether this sell-off, this is just a reaction to the sell-off, and the sell-off will reassert itself, and there'll be further correction. Certainly there can be from a fundamental perspective. There's looking at the situation, the COVID situation, the election, the uncertainty of whether the result will be accepted. I mean, I can list a load of fundamentals which I don't understand for negative reasons at this time. The fact that probably the Federal Reserve has really got no more ammunition to give us any more QE. So, it's really going to have to say, I can't really do much more to prop up the market. So, there is good reasons for it to reassert itself on the downside if it's going to do that. If it were to do that, by the way, I think they would find very big support at 3,100. That's way down below here. Short term, I believe higher, probably to the 50% retracement level, 3,400, then possibly stalling and reasserting the downtrend, but that's quite far ahead. Okay, as we approach the last few minutes, we'll go to gold. Gold, amazing, finally breaking out of its triangle that it had been in. I want to go to the
Gold daily we're looking at.
You're looking at the weekly chart? Looking
at gold weekly, sorry, yes.
Yeah. Okay, we talked about this big triangle here around the $2,000 level. It had to break. It came really almost to its apex, which was very unusual. And then we had the big sell-off as the dollar advanced. The gold took a major hit. It broke some support levels here, and it's at a pretty important support level now, but that's a pretty fragile one. So let's have a look at the daily and look at this in more detail. So here we are, and we're testing this. If you remember, that was the beginning of the triangle. Triangle shape was here, and so we're testing that. We've taken out these lows here already, and we're finding a little bit of support from the end of last week and today here, correcting the deeply oversold level coming up here. So the direction from the low reading is up. So it looks in the next day or two that we'll move higher in this. But that doesn't mean that it's all over for gold. If this low gives way here, and it isn't a strong support level that we're getting from this August low. So if the 1850 level gives way properly, let me tell you what the exact number is. So, whoops, paused, I saw that. So the low is $1847 there. So a break of $1847 would be very negative for gold. And the problem with it is there's then nothing underneath it. I'll go back now to the weekly chart. Sorry, jumping around the way I am. But if we break this level here, then what's below us? Well, we moved up so fast in this bit here that there wasn't any support developed. There was support here around 1750, below 1750. So from 1680 up to 1750, that's very, very big support there, but there's nothing in here. So a failure of that 1850, whatever it was, level leaves the gold market vulnerable to quite a sharp drop down. So short term, by that I mean a day or two, we look as though we're going to steady up a bit, but that's just a reaction to the severe drop of last week. Then watch the behavior after that. If it does go up, we've got a lot of resistance now above from all the consolidation during August, September time. But what is the support that we're developing here so far is quite limited and therefore vulnerable. And I'm very worried that we might be retesting those low levels below 1750, around 1750 once again. So watch out there. It does look technically vulnerable. The only bullish factor is that it's oversold, and it seems to be correcting that now without really going up very much. So that leaves it able to go down again. All right, my friends.
Okay, thank you, Trevor.
Sorry about that.
No worries. We went over only by 6 minutes, so congratulations, Trevor. keeping pretty well within the time frame. Well, thank you very much again, Trevor. Thanks to everybody for attending. Please join us again next week at the same time, same place. And we ask you to take a moment to fill out the survey at the end to let us know what you thought. You know, we do this webinar for you guys. So all the feedback that we can get from you, just let us know what you think about the charts, about the material that we cover, and then we can improve our offering to you. So without further ado, hopefully see you all next week. See you again, Trevor.
Yes, indeed. Thank you very much, Dan, for looking after us so well. Thank you to those who asked questions. I encourage you to ask questions. And, you know, I'll do my best to answer them. Obviously, we've got time and limitations, but I'll do my best to answer them. Thank you very much, everybody. I hope it helps. May the trend be with you.
Thank you, Trevor. Bye-bye, everyone.
Bye-bye.